Okay, welcome everybody to today's webinar entitled Leading Electric Company Innovation Through Private Equity Investment. My name is Daniel Noll. I'm a Senior Manager for International Programs at the Edison Electric Institute, and our speakers today are Kevin Woodbury, who's a Director for Business Development at Fortis, and Evan Pittman, who's Vice President for Innovation and Commercialization at Energy Impact Partners. Before we begin, just a bit of housekeeping. This webinar is part of our global webinar series that each month brings presentations and content on what's going on around the global electric power industry. And we have another webinar upcoming on November 20th on ESG and sustainability reporting and the EEI template. For today's webinar, we encourage you to submit questions using the chat feature, and the remainder of our time at the end of the hour will be devoted to moderating some of that question and answer. If you are not already subscribed to our newsletter, it's a great way to keep abreast of the upcoming events and activities like this that we organize. And so without further ado, I'll introduce our speakers who are going to speak today on technology innovation and what that means for how electric companies evaluate and develop new products and services in order to improve operational performance or to provide for better customer experiences. Understanding technology innovation is a critical success factor for enterprises operating in today's industry, and as the power sector has become more complex and more digital, advances in power electronics and information and communication technologies, cloud computing, and other related fields, they all have the potential to provide for incremental and disruptive change to the industry. Moreover, the speed of technological change has also accelerated, which is leading electric utilities to put greater emphasis on the strategy behind how innovation is pursued. And so it's not just a question of whether or not you build or you buy a certain new technology, but how large organizations in today's environment can identify the new technologies that are entering the sector and evaluate the value that they may have for their company. So without further ado, I'm going to turn things over to Kevin Woodbury to kick things off. Kevin?
Hi, good morning, good afternoon, and good evening, everyone. I understand we've got people calling from various different parts of the world, so welcome, and very pleased to have the opportunity to talk to you today. As Daniel just said, I'm Kevin Woodbury, a Director of Business Development at Fortis, Inc., and in my role at Fortis, Inc., look after sort of corporate level M&A as well as major projects supporting our subsidiaries on those kinds of things, and as well as innovation from a corporate perspective, which is substantially through the relationship we have with Energy Impact Partners. So happy to get to talk to you about that a bit today. I'm trying to change the slide. Apologies. Daniel, I can't seem to change the slide.
Can you use the page down button?
Yep.
There you go.
Apologies for that. And just before we start, of course, the standard forward-looking information slide. I'm not going to go through that in detail. Anybody that's interested can have a read of that after. So a little bit about Fortis, Inc. for any of you who are not familiar with us. We are a Newfoundland-based North American utility, and that question sometimes brings about where is Newfoundland. And Newfoundland and Labrador is one of Canada's 10 provinces, and we're on the most easterly point of Canada. And in fact, our offices are about a 20-minute drive from the most easterly point in North America. So on the map that you can see there, we're the red dot in the top right-hand corner, and that's where we have started from, and that's where we have grown from, and we've grown into being a top 15 North American utility on the basis of enterprise value. And you can see a number of our subsidiaries there. 5 operating subsidiaries in Canada, 3 in the U.S., Central Hudson in New York, ITC, which is a large transmission utility through the Midwest, and as well as UNS Energy in Arizona. We also have some operations in the Caribbean. Our model is a little bit unique, we believe, for the industry in that we operate a very decentralized model where each of our subsidiaries has a majority independent board of directors as well as a local independent management team. And that allows us to operate with a pretty lean corporate office. So with 50 billion Canadian in assets, we have about 57 employees in corporate office looking after that, and I'm one of those. So a little bit about our history. We started in 1885 in Newfoundland, right here close to St. John's, and which is the capital city of Newfoundland. And throughout our initial history, we grew through Canada. Most of that growth happened in the early 2000s. And then in 2013, we embarked on a U.S. acquisition strategy, which we feel is quite successful, and then today are pretty focused on organic growth throughout our territories. We're about 97% regulated utility assets, and that's been an important part of our strategy, is to really focus on a regulated type of a business, which does have some interesting aspects to it when you consider how we have to look at innovation and innovating in the regulated space. About 92% of our assets are transmission and distribution assets, so not a great deal of generation, and about 3.3 million utility customers. Sustainability is important to everything that we do, and just wanted to put this slide in here to identify that. And certainly the fit with EIP is strong when it comes to looking at being greener. And then finally, our employees. We've got about 8,500 employees across all of our operating companies that make it happen, and again, about 57 in our corporate office. And this picture here is a few of those 57. This is in late 2016 when we initially listed on the New York Stock Exchange. We've traded on the Toronto Stock Exchange for a long time, but listed in New York in 2016. And it was a foggy, cool day, and they all hiked up to the top of Signal Hill, which is a place here in our city where the first transatlantic communication took place. And so you can see a little bit of our city in the background, but I'm pretty proud of all these folks. And that's who we are as Fortis. So I'm going to turn it over to Evan now to talk a little bit about Energy Impact Partners, and then I'll come back at the end and talk about how we have leveraged that relationship for our innovation strategy. So Evan, off to you.
Thanks, Kevin, and greetings, everyone. Special thanks to Daniel and EEI International for giving us the opportunity to speak to you guys today. Let me try to get calibrated on the right slide here. Great. So I'm our VP of Innovation and Commercialization for Energy Impact Partners, and I'll explain what that maybe confusing title means once I sort of walk you guys through what we do at EIP and how we enable innovation for our utility partners. So at its core, EIP is an investment platform that's helping incumbent energy providers understand new technologies, connect with innovators and entrepreneurs at the forefront of the industry, and basically help them navigate the upcoming path towards a digital, decentralized, decarbonized power system. So our utilities really are a key part of the recipe here. They provide most of the capital that we have under management. We're investing a couple of funds that total about $680 million in investable capital. Our utilities also set our direction. Where should we be investing? And they help us throughout the investment process by helping us evaluate companies and understand how those companies might work deployed into the energy system. Of course, our innovators and the entrepreneurs we've invested in provide value back to the platform as well through partnerships with our utilities to deploy new technologies out to their customers and into their systems, as well as to generate insights about what's really happening and what's really coming down the pipe. Our utility coalition comprises 14 large utilities, global utilities. You see it, and we organize this based on, sort of on how much capital has been contributed into the fund. So at the council level, Southern Company, National Grid, Xcel Energy, and AGL out of Australia participate. Fortis and several other utilities around the U.S. and Canada come in at the extended council level. And then we have some additional international participation at the participant level with TEPCO out of Tokyo, of course, and PTT out of Thailand. This coalition adds up to some pretty powerful leverage. We've run the stats on our partners, and collectively, these partners touch 85 million households, have over 250 billion in market cap, spend 60 billion in new capex every year. So this, helps us attract the best deals in the industry and create great strategic value for the companies we do invest in. So why do our partners participate? This is directly from, this is survey data directly from our partners. And what they're excited about is discovering new technologies, understanding competitive threats that are coming their way, increasing customer satisfaction and connectivity, new revenue opportunities, et cetera. What's notable, when I look at this is financial returns is not at the top, i.e. direct financial returns from the fund. We, of course, focus on those and expect to deliver great financial returns, but the priority for our partners is having a strategic impact in the business and not necessarily making money off of the investment activities directly. So we also ask our partners, what specific sectors are you most interested in, and where should we be focusing our investment efforts? And this is the very latest survey data that we collected just a couple of months ago. We refresh this every year. So right now, the top category probably won't surprise anyone. EV charging is of great interest to our utility partners. That and electrification more broadly, of course, is a huge growth area for the industry right now. Other interesting, and then you see several other electrification and EV categories just shortly below that. Interestingly, this year, advanced rate design, pricing, and billing systems moved up to the top of the list. So I do wonder if that portends more activity in terms of a move towards more dynamic pricing or a shift away from sort of traditional volumetric pricing. So for the rest of the short slide run here, I'll just go into a little more detail with you guys about the process that EIP has in place to help our partners innovate. It starts with getting the group together, the utility group, hearing about their priorities like I just elaborated on the last slide, and sort of orienting us. Then, of course, we have the actual investing process. Third, we draw a whole bunch of information and insights out of that investing process and out of those collaboration activities and make those available to our partners to help them set strategy. And then finally, with innovation commercialization, again, my specialty at the firm, we help them take those insights and put it into action and actually, start to transform their culture at the utility and start to deploy new products and services, get closer to their customers, streamline their operations. So at the collaboration level, our sort of anchor collaboration activity is what we call our council days. And so every 6 weeks or so, we bring together the ambassadors from each of our Nexus utilities. That's the individual or a couple of individuals that each utility is designated to be the primary point person for the EIP relationship. That's Kevin's role. Kevin is Fortis's ambassador, who you just heard from. And so at these sessions, we review, we give updates on the fund, review everyone's priorities and talk strategy a little bit. But what's really cool is we bring in investments that we're considering into sort of a Shark Tank format, where we have their leadership teams pitch their company to our utility partners, and we get real-time feedback from the utility partners on how strategically relevant the company is and whether EIP should explore investment. Complementary to our council day activities, we gather expert working groups. And whereas our council days are fairly general, our expert working groups are deep dives on specific topics in the industry. So you see a few examples there on the slide. We've done a few recently on cybersecurity, EV charging, blockchain, the hydrogen economy. And what we do is we pull, instead of the ambassadors from our utilities, we ask our ambassadors to help us find the best subject matter expert in their utility on these topics. And we bring them together, and our research and strategy team internally at EIP at the same time starts scanning the landscape for all the relevant companies that are active in that space, starts doing some interviews, and ultimately brings some of those companies in to present to this expert working group. And that's also a great source of deal flow and discovery of new investment opportunities for us and technology opportunities for our partners. The second stage is making those investments. So I alluded to this already, but we really seek to find companies that meet two criteria. The first is strategic relevance to our partners. It has to matter to them, or it's not an interesting investment for us. But then, to risk stating the obvious, it has to perform highly on financial attractiveness as well. So we really collaborate closely with our partners on the strategic relevance dimension, but we rely on our own investment committee, and our deal team leads expertise in evaluating financial attractiveness of opportunities to rate that group, so that dimension. So we really, our criteria basically for who we invest in is that we like to see a company with a proven technology. We're not investing in early stage battery chemistries or things like that have some technology risk. We want to see a little bit of traction in the market, a company that's got a product or a technology that's ready to scale up into the industry, and that's where EIP can really add a lot of value in terms of coaching them on how the industry works and helping them deploy into a large set of utilities, i.e. our partners. We typically invest $10 to $50 million per investment. To date, we've invested in 20 companies. I certainly won't go through all of them here. There's brief descriptions if you guys want to reference the slide afterwards. And, of course, there's more information and links on our website as well. But broadly, we organize our investing activities under 3 deal teams. The first is customer-facing solutions. And so Lindsay Luger, our partner who focuses on that area, has led investments in, just some examples here, Sense, which is real-time detailed load disaggregation technology for residential customers, First Fuel, which is analytics for CNI, engaging utility CNI customers, Ring video doorbells. So we've invested a lot around the smart home thesis and sort of in companies that sell direct to customers, so we can A, learn how those companies are engaging customers in a highly competitive environment around energy-related technology, and B, find opportunities for our utilities to partner and introduce smart home solutions to their customer base. The next sort of team investment team we have focuses on new technologies to help utilities improve sort of their core asset management capabilities. And so a couple of examples out of that category are Clevist, which is a highly configurable mobile workforce management solution for utilities. Urbint is a good example in that category. Urbint, it collects data about the physical environment, processes that into a graph database, and then applies machine learning to generate insights about the risks that utility assets face. So think identifying atmospheric corrosion on downstream gas infrastructure in a more sophisticated way than just the typical 3-year inspection cycle. And then the final deal team invests in sort of disruptive and distributed technologies. So Arcadia Power is an example coming out of that. You could call that a customer engagement solution, but Arcadia is a platform that is engaging residential customers all over the country, regardless of sort of the market structure there, and getting customers onto a sort of modern dynamic billing platform and then offering premium energy services to them. Mosaic is financing rooftop solar and home energy efficiency projects. So I'll leave it at that and let you guys browse through the rest. So third item I mentioned in the journey is making sure that our utility partners can see and absorb the insights that all these activities are generating. So really 4 avenues through which we do that. The first is sector reports. So these really typically come out of those working groups that I described earlier. So, if we've done a working group on, say, the future of mobility, that's one we're actually hosting in New York this week. A month or so after that in-person summit, we'll generate a 40-page or so deck that summarizes what trends we're seeing in the space, what it means strategically for our utility partners based on your feedback and our collaborative thought process, as well as landscapes, and that's what you can see kind of pictured here of who's active in the space, what are they doing, and how do the puzzle pieces fit together. We give our partners real-time access to our deal pipeline, so they can see the 1,500 plus companies that we've evaluated for investment, those that we're in late stages of actually considering or executing on an investment in, and for those we passed on, they can see why, and so you can get insight into sort of the quality of these different companies. Anytime we do invest in a company, we create a detailed deal approval memo that helps our partners understand that company, why we're bullish on it, and why it makes a good partner, why it could make a good partner for them. And then finally, we do a lot of custom advisory and experience sharing. So we get out and we visit the board, the C-suite, the operations leaders at our utility partners, give them, deliver some of these insights, think through some strategy issues with them, make sure they understand the companies in our portfolio and the others we've looked at, and really have a grip on these new technology trends. Finally, getting to my sort of realm within EIP is helping them put those insights into action. So, one piece of that is, again, helping them understand the portfolio and finding the right opportunities to collaborate. We really, view a big part of this function as cutting through the noise. So with, 20 portfolio companies and growing, and 14 utility partners who actually represent 56 unique operating companies. Fortis represents, as you heard from Kevin, 10 or so operating companies themselves. It's really an exercise in matchmaking. So I spend a lot of time chatting with Kevin, meeting folks in the Fortis operating businesses and listening to their on-the-ground challenges and priorities, and helping connect them with the folks who can help solve those challenges, and helping them think through how to work with those folks and how to bundle the right packages. And often that's working with our portfolio companies. We think they're the leaders in the space, but we can also advise when we've seen other companies come through that maybe we didn't invest in because we couldn't agree on valuation, but it's a great product and solution and a good fit. We help facilitate those connections as well. So just to share a couple of tangible examples here of our utilities putting innovation into action with our portfolio companies. I'll go through 4 kind of quick examples here to share with you guys. AutoGrid is a distributed energy resource management platform, and Xcel recognized that they needed, especially as they deploy a lot of renewable energy into their system, they need to get ready for operating, basically harnessing more flexible capacity and being able to respond more ably to fluctuations in renewable output, both predictable and unpredictable fluctuations. So they had a whole bunch of legacy DR programs across 8 states, but realized they weren't getting any operational value from those from their control center. So partnered with AutoGrid to bring all of those systems under one roof, both legacy DR programs and battery installation they have at the Denver airport and a few other distributed technologies. Bring insight about those and control over those resources into the operating room, and tie into other Xcel business systems that give intelligence about what's happening on the grid, so that AutoGrid and Xcel system operators together can optimally dispatch that fleet of resources. And there's about 1,500 megawatts of resources under control there, which makes it really one of the largest aggregations of distributed capacity in the world. Another example, again, really about coordinating distributed resources, obviously a big challenge and priority area for the future for our partners, is Opus One working with National Grid on a transactive energy REV demonstration project. Opus One's core technology is a platform that does real-time power flow and state estimation for the distribution system. So really giving utilities visibility on power quality, voltage, and power flow issues at every node on their distribution network, an area where utilities have historically been blind. And the particular application of the platform, in this case with National Grid, is on calculating real-time prices at every node on these two feeders that they're testing the project on. So they're taking into account wholesale market conditions. That LMP sort of forms the basis for the price, and then based on conditions, whether it's constraints or losses at different points on the distribution feeder, they generate the New York Rev calls it LMP plus D. So they generate that D price signal, and that price signal gets sent out to the set of distributed resources on a Buffalo Niagara Medical campus on that feeder, and they operate their loads and distributed generation in accordance with those price signals. So sort of, there's an interesting, as we move to the future in distributed energy resource control, there's this question of how much is done by control and how much is done by pricing. And so those two examples sort of show different ends of that spectrum, and ultimately how you might sort of find a hybrid of those two models. I mentioned how important EV charging is to our partners. Energy Impact Partners invested in a company called Greenlots about a year or a little more ago, and Greenlots has basically offers turnkey EV charging solutions to utility partners and cities who want to deploy this infrastructure, with really its core IP being in the software that helps these providers operate those networks. And so they've partnered with EIP utility Avista to do a pilot, a utility-owned infrastructure pilot, deploying a few hundred chargers around their territory, and making sure that those are deployed in a way that is conducive to operating the electric system. So they're testing demand response capabilities on those platforms, figuring out what customers like and don't like, really setting themselves up for a positive future in terms of having an active role in the EV space and in getting their customers in their service territory, comfortable with EV charging. With EV adoption. Making sure they have good access to charging. They've really had tremendous customer satisfaction in this program, 96% in the residential customer class, which I think also speaks to, preparing them well to have an active role in the system in the future as they have that discussion with regulators and other stakeholders. Last one I'll highlight for you guys here is some collaboration between Alliant Energy and First Fuel. Alliant is really redefining the way they engage their C&I customers. And so really helping C&I customers find the right sustainability solutions to meet their needs. And part of that is includes beneficial electrification. So there's opportunities where, Alliant can see load growth, but it also creates environmental benefits through reduced CO2 reduction and financial benefits for the customer. So they've partnered with First Fuel to use their digital engagement platform to help analyze all the data they have on their customers, identify those who are good fits, have actual applications going on that would be well suited to electrification and other sustainability solutions, and have a high propensity to adopt those solutions, engaging them both through their key account management team, through outbound channels, but also making some of those insights and suggestions available for when customers log in to their utility portal or when they call into the call center, and basically, Alliant has set definitive goals around these engagement opportunities and load growth, and it's really taking a targeted approach to executing on those goals. Just some parting thoughts for you guys before I hand it back to Kevin on ways that you can work with EIP. If you're interested in learning more about any of our portfolio companies or working with them, please feel free to reach out to me on that front. I'm happy to spend some time with you and understand your priorities and give you some background and introductions as appropriate to the portfolio. we, often co-invest with folks. So if anyone's interested in investing, reach out to my colleague Cassie. You see her email there, Cassie Bow at energyimpactpartners.com. We are exploring ways we can collaborate more around the ecosystem on our research projects. Point person there is Shail Khan, our SVP of Research and Strategy. And finally, if there's companies you think we should be considering investment in, please flag those for us to Cassie. One more concept of how we might work together that's really just hot off the presses, or hasn't even made it into this slide, is that we've just soft launched our fundraising efforts for our next fund. So if you as a utility on this call are interested in being part of the EIP ecosystem going forward, please reach out to us. You can ping me, and I'll be happy to connect you in and answer any questions you have and explore whether it might be a good fit for you. So we're excited to be embarking on that next phase of our journey here. And with that, Kevin, I will hand it back to you.
Thank you, Evan. Appreciate the overview and all the detail on EIP, and I think it's great information for people on the call. And what I'm going to try to do now is talk a little bit about, you've heard a bit about who we are as Fortis, now you've heard about EIP. I'm going to try to talk a little bit about how we've leveraged the EIP relationship to turn it into sort of actionable things within our subsidiaries and within our corporate office, where we've learned a lot and made it a part of our innovation strategy. So speaking of strategy, just a little bit here, I thought just a sort of an overview slide of our focus might be helpful. So you can see in the middle there that our sort of overall strategy from Fortis Inc.'s perspective is to leverage our operating model, footprint of our utilities, our operating expertise, and our reputation and financial strength to develop growth opportunities. And our focus right now is substantially on organic growth within each of our operating areas. And so the EIP relationship and some of the innovation and ideas that come out of that are pretty key. And all of that is behind supporting our average annual dividend growth target of 6% through 2023. So if you look at the areas of focus across the bottom, a lot of these would be similar to other utilities, so it really comes down to execution for us, which is very, very important. So the utility capital investment plan and investment-grade credit ratings, which are very much core to us. We also are focused within our subsidiaries on system resiliency and cybersecurity, sustainability and delivery of ever cleaner energy, customer and regulatory relationships, and energy infrastructure, LNG expansion, and energy storage. And so really at the core of all of that is the customer and, of course, the safe, reliable, affordable delivery of clean energy. And so I think the interesting thing is here, I've put some circles and boxes around these. If it was in PowerPoint, we'd actually see them animated and have them come flying in now. So just imagine that with me for a minute. That the dash circle is coming in, or dash square rather, and is saying that the different things and the innovations that we're talking to Energy Impact Partners and the portfolio companies and the other utilities who've invested in Energy Impact Partners, we're talking to them a lot about key technologies that impact each of these four areas and key areas of focus. And ultimately, by focusing on these things, we think we're supporting our utility investment plan and ultimately our credit ratings. So in that way, Energy Impact Partners is pretty key to our overall strategy. And so why or how did we end up here? I guess if you roll the clock back a couple of years, us, like many utilities, we're seeing a lot of changes coming in the industry, trends like the emergence of battery storage, certainly a lot more renewables on the grid and all the things that come with that, grid modernization in general, a need for improved resiliency. A big one for us that we've seen and been very focused on is evolving customer needs, sort of desire for choice and control, a lot of which has emerged with the interactions which customers have with other companies like the Amazons and the Facebooks and Apple and these ones where people are used to having their own choice and control. Electric vehicles, Evan mentioned as being a key one. Certainly cybersecurity and ESG. And these were all trends that we've seen coming for quite some time. And although could be perceived as, some of which at least perceived as presenting some risk to the industry, we saw mostly opportunity in these. And our subsidiaries have seen these as well. And certainly at a subsidiary level, they're acting on these and have been acting on these for some time. But we were looking for something that would provide us with a corporate level lens into these trends, and something that would fit within our operating model, which, as you'll recall, I explained, is really quite decentralized with substantially autonomous subsidiaries out there. So us, with our small number of people, there's 2 of us work in business development corporately, and speaking with our senior executive, really felt that we needed something. And so this is where Energy Impact Partners really entered our strategy. And so a little bit about why we chose Energy Impact Partners, and it's interesting. Evan sort of highlighted for all of the utilities what were some of the key reasons for them, and sort of strategic reasons were front and center for each of the utility partners, and certainly they were for us. And so we sort of delineate our strategy with EIP along 3 lines, and the top one of those really is a strategic external look. And so you can see on the graphic on the right-hand side there has a smart grid, and then a lot of the different things around that we talked about as emerging trends on the previous slide. And certainly if it was a bigger picture, we could fill it up with even more things. But we feel that the relationship with EIP, we felt and we still feel today, provided us with that lens on what was happening within our industry, what was happening in other parts of the world within our industry that we would get exposure to through our involvement with Energy Impact Partners, as well as some insights into how our peers were perceiving this and interacting in it. And we felt this was a very key thing for us. I would include within that, Evan mentioned over 1,500 companies that they have in their pipeline that they've looked at, as well as several hundred snapshots of those companies, and these Shark Tank meetings and these kinds of things is just providing crucial insights for us into the external environment. The second key thing for us from Fortis Inc. perspective was a strategic kind of an internal look. And we saw that EIP provided us with a great opportunity to provide unique development experiences for our subject matter experts from within our subsidiaries. And so things like working groups or other research projects that EIP is leading, we get to, first of all, from a corporate office perspective, learn from our subsidiaries who are our best people, who is doing what in various different areas, whether it's electric vehicle infrastructure or distributed energy resource management, and find out who some of our best people are, and then give them an opportunity to interact with other subject matter experts within Fortis, within the Fortis family of companies, as well as then with Energy Impact Partners and all of the other people who've invested there. And so it's really proven to be a great sort of talent management, as well as an internal view and an opportunity to strengthen internal relationships for us. So that's another way that we've really leveraged the relationship. And then, as Evan said, we do expect at the end of the day to make a financial return here, which is something that we all would like to see. So a few more specific examples of how we've leveraged the relationship with Energy Impact Partners for collaboration and learning. And Evan mentioned a lot of these actually, and I would even say at the very top of this list probably should be Evan's role as being key. His ability to speak with our subsidiaries and to learn of their priorities, and couple that with his knowledge and deep knowledge of the portfolio companies and make those appropriate relationship introductions is very key. But other ways are through the council days, which Evan also introduced, where we have an opportunity to get together with the other partners in the fund, learn from each other about what we're doing and how we're engaging both Energy Impact Partners and how we're engaging the industry in general. as well as see presentations from innovative and unique and new companies. And then we get to bring that information back and we share it internally as well. I spoke a little bit about engaging subject matter experts at our subsidiaries in things like working groups and sector reports and other bits of research. This has been, perhaps one of the best ways to increase communication internally across subsidiaries that I think we've seen, and has gotten people pretty charged up and pretty excited, and has helped us communicate, the innovation message from a corporate level pretty effectively, to this point. We also have internal working groups. You see the FOG group there. FOG stands for Fortis Operations Group. It's also appropriate because we get a lot of fog here in St. John's. But it's a group of our key operating executives from each of our subsidiary companies. They get together in person a couple times a year, communicate regularly, collaborate, work on projects, these kinds of things. And so that is one group that has been very plugged into the relationship with Energy Impact Partners. And in fact, Evan has come to one of those FOG meetings and spent some time with each of those operating executives and talking about Energy Impact Partners and the portfolio companies. We have a customer service group which is structured in a similar way, which we have engaged internally around Energy Impact Partners, innovation, and those kinds of things, as well as a regulatory group, which recently was together and had a presentation from Evan and Kevin Fitzgerald from Energy Impact Partners as well. We've also used resources from Energy Impact Partners to help with executive development and sort of talent development in that way. And so they attended. We have an annual Fortis Day meeting where all of the executives from our subsidiaries get together for a 1 day or a day and a half sort of talent management and development session. And so it was a great opportunity to have Energy Impact Partners come in and speak about ways that we can, innovate, ways that we can work with them and with the portfolio companies to advance our overall innovation agenda. We've also made dozens and dozens of portfolio company introductions between our subsidiaries and EIP portfolio companies. And some of these have developed into ongoing business relationships. Some are still in the phase of moving that way. And then others have just turned into opportunities where we've learned from the portfolio company, and the portfolio company has learned from us. And so where we have sort of advanced into pilots and R&D projects, I want to emphasize that our role has really just been to make introductions to the portfolio companies. Certainly, our businesses are regulated businesses, and our focus is on innovation and development within our regulated businesses and regulated lines of business. So, we make the introductions, and then where we are doing these projects, the portfolio companies have been winning the business through RFPs and through the normal, otherwise regulatory process. So, it's been a very good experience for us. And certainly we get access to a lot of information, sector reports and research reports that come out of the working groups, access to the deal pipeline, company snapshots, and those kinds of things, and have shared that pretty broadly with our subsidiaries. And so that's the why and the how, I guess, of the relationship with Energy Impact Partners and how we've made that a part of our innovation strategy. And so now I guess maybe a little bit about the what. Some of these innovations, many of them haven't come directly from the relationship with Energy Impact Partners, and a lot of which were actually in motion before we joined the Energy Impact Partners coalition. But just wanted to speak to a couple of examples of innovation at work in our subsidiaries, and then we'll be able to turn it over to a few questions. So innovation in action. At our subsidiary in British Columbia, on the west coast of Canada, we've got some neat things on the go with regards to renewable natural gas for end-use customers, where we're using waste products to develop biogas and then upgrading that to renewable natural gas and making that available to customers to buy. So pretty neat, pretty green, and a pretty interesting project. We're also doing marine bunkering with LNG, which is we believe has an important future in greening the shipping industry in particular. And we're in the process of testing hydrogen injection into the natural gas system. And actually, this is an area where I don't think EIP has made a direct investment yet, but where we have been exposed to companies working in this area with sensor technology and these kinds of things. So it's worked out pretty interestingly. Also of note, and it's not noted on the slide here, but in Fortis, BC, we're leveraging a relationship with Clevis, which is a portfolio company of EIP, to improve productivity, customer service, and safety at the utility, and really taking advantage of the modern configurable mobile workforce management software that Clevis puts forward. And a number of other examples in Western Canada as well, at Fortis, Alberta, where we're working with one of the portfolio companies on a potential non-wires alternative project. Certainly more to come there. Arizona is another hotbed of innovation, and certainly an area where we have a lot of focus on innovation, and where we've had people with significant involvement with Energy Impact Partners, and it's been a great opportunity for learning for them. Our plan there has significant grid upgrades to integrate distributed resource technologies, which is there's a lot of solar in particular in Arizona. And so some of the ways that we're doing that is through fast ramping flexible generation, which is being put in place, which is will help us to effectively manage the increasing amount of variable load, or variable generation rather. Also, short duration distribution, utility scale battery storage. We have a project there that is in action right now and is being used on the system. And then sort of future looking to more grid scale bulk energy storage, which is going to be needed to reach the increasing amounts of renewable penetration and support that. We also have at UNS Energy working with a number of EIP portfolio companies on potentially early stage development and pilot projects, and more to come there. So the relationship with EIP again is rung through pretty true in our involvement at UNS Energy. And the final project I'm going to highlight is at ITC Holdings, which is our large independent transmission company, and they're currently developing in the early stages of development the Big Chino Valley project, which is a 2,100 megawatt closed loop facility, and is really supporting the public policy goals in the Southwest region for cleaner resources, cleaner generation, and a need for much more larger scales of storage. So a few others just to mention in closing before turning it over. We've mentioned cybersecurity a few times, and there just recently was a cybersecurity working group refresh with Energy Impact Partners, and we had people who were engaged in that refresh, and always sort of a current topic for us, and frequent conversations with Energy Impact Partners about cybersecurity and managing that going forward. And as well, conversations with EIP companies such as AutoGrid, Greenlots, Tendril, Ecobee, and others, really across our subsidiaries, about opportunities for mutual learning or potential pilot projects in the future. So all in all, and just to summarize, I think we joined up with EIP with a pretty broad mandate to help us with our innovation strategy, and would have to say to date it's been a great relationship, and thanks to Evan for being a great resource for us, and to all the folks at EIP for being willing to step up and come and talk to our groups and to answer questions that are specific and those kinds of things. So that is how we are leveraging a private equity investment to support our innovation strategy at Fortis Inc. And with that, I'll turn it over to Daniel again to moderate, questions and discussion. And thank you very much.
Thank you, Kevin, and thank you, Evan. Kevin, first a question for you. I think you really drove home a good point about how partnerships like the one that you have with EIP have given you greater visibility into where innovation is occurring, so you can evaluate a much broader landscape of potential technological solutions. But could you speak maybe a little bit more about the process and the experience that Fortis has had in taking innovations forward in a regulated context, and whether or not you have found there to it has become easier to deploy technologies once you've made a decision on where you want to invest, or if it's still proving to be something that's very dependent on the local sort of regulatory context of your companies.
Yeah, interesting question, and I think we probably could have a webinar about that on its own. So I guess from our perspective as Fortis Inc., just going to hammer home first that where our strategy is to be very decentralized, and again our boards of directors at our subsidiaries are majority independent directors from within the service territory. Our management teams are local to the service territories, and we believe that's a very important part of our strategy when it comes to working with our customers and with our regulators as well in those areas. And so what I would say is that the regulatory approach to undertaking innovative projects is very different at each of our subsidiaries, because whether you're in the U.S., where anyone who's there is aware that the state regulators regulate the utilities state by state, and there are differences. The same is true in Canada. Each province has its own regulator and regulates their utilities quite separately. And so, interesting question: is it easier? Has it become easier? Is it harder to innovate in a regulated environment? I think it is probably becoming easier, because these innovations are spoken about more and more. I think there's some very good examples around electric vehicle infrastructure, which is very important for meeting greenhouse gas initiatives, policy requirements in various states and provinces, and where we've become engaged with the Alliance for Transportation Electrification, which is a group in the U.S. of made up of utilities, has members from utilities, the EV infrastructure space, OEMs, and sort of with the common goal of helping the regulators, with an understanding of the importance of a open source technology, robust utility role, and the growing infrastructure gap that is coming on the EV infrastructure side of things. And so that's, I think, an example where we've been able to be proactive, where we've worked with the group to work with the regulators, and I think it is making a difference in terms of being able to innovate in the regulated space.
Thank you. Evan, I have a question for you. How active or passive a role does EIP take with your investments?
Thanks, Daniel. Quite active, I would say. So, as I alluded to in one of my slides, we only really like to invest in companies where we can have strategic value. Otherwise we don't think our money is particularly differentiated. But we have a wealth of resources at our disposal, both internal EIP staff as well as our network of advisors who have a tremendous wealth of experience in the energy sector. Stephen Chu and others are on our advisory board. And then we also have the huge coalition of utilities who know what's happening on the ground, know how to help our utility companies understand the market and craft their products in a way that's going to create value for their utility customers. So that's a long-winded way of saying a lot. We sit down with the companies, after we invest, and talk through their growth strategies and their product roadmap and, provide them feedback where it's helpful. Often our companies will come to us and say, hey, I'm thinking about moving my product in this direction. Can you connect me to some experts in your utility so I can just get some feedback on that before I, invest in moving in that direction? And then, of course, I collaborate with them on sort of business development and go-to-market strategies around, how to frame their solution, the value of their solution to appeal to utilities, and how to other channels they can use to reach customers. We work hard on building up a big network of potential partners, technology and channel partners for our portfolio, even outside of the utility network. So, just a few examples there, but we're very hands-on and eager to help them grow their business.
Thanks for that. A third question here, primarily for Kevin, but Evan, you may have some thoughts on this as well. As I was looking at the portfolio of companies that EIP has invested in, there's a large number of software companies, and it seems that in the sort of area of handling data and developing new software controls, there's a choice that often probably needs to be made between, do you work with established vendors who may be capable of developing something that meets a particular operational need? Do you look out to the ecosystem of startups and software companies to see who might be coming up with or starting a new business that can provide the specific capability you're looking for, or is there a process of internal development that can meet the needs that you want? And so I'm curious if you could describe a little bit what are some of the factors that might come into play when trying to decide whether or not working through venture capital and funding new startups is the right choice for a specific need that you might have identified in your businesses.
Yeah, thanks, Daniel. That process for each of our subsidiaries would look a little bit different, but I think it's fair to say there would be some common elements, and it's going to be situation specific. So for each project or each particular need, as the subsidiary begins to evaluate its options, I can say with confidence that they're really looking across the broad spectrum of ways, whether that is internal development or buying from an established partner or sort of investing in the opportunity to go with somebody a little bit new. And I think one of the interesting things about the portfolio companies, the vast majority of them that EIP is invested in, and Evan mentioned this in his part of the presentation as well, is that most of them are not at the real startup phase. They're companies that, for the most part, have a product that has been tested, it has been deployed, they have customers, they have revenue, and they're kind of at an inflection point in their evolution, and the investment is largely to help them scale. I know that sounds simple, but it isn't necessarily. And so a company like Clevest, who we have partnered with at really 3 of our subsidiaries, although maybe not one of the longest-term established players, we have found huge value in their particular software and meeting the needs of our business, our employees, and our customers. And so, but that did not come kind of out of the blue. That came certainly from a broad view of things, whether looking at doing it internally or going with a larger, more longer-term established player. And ultimately, for those 3 subsidiaries, Clevest came out as being a company in that sweet spot and really meeting all of their needs. Whereas even within our group of companies, within another subsidiary, they might make a totally different decision, and they have in some cases, and gone ahead and kind of developed their own internal products or gone with an established player. So it's very case specific, and I would suggest that in the vast majority of cases, each of those options is evaluated, but we do feel that for the most part, we're not sort of investing or leaning on the earliest of early stage companies. So you have a comfort level there that we're doing the right thing for our business and for our customers.
Thanks. We're right up on the hour, so I think we'll conclude questions there. Kevin and Evan, thank you both very much for sharing your experiences and a little bit more about how Fortis and how Energy Impact Partners are working together and working in the space to think through some of the really thorny challenges of how innovation can be put into practice in today's power sector. And so thank you to all of our attendees for joining as well. If you have additional questions or comments, feel free to email us at international@eei.org. And as a participant of today's webinar, you will shortly receive an email that will have a copy of the presentation and a link to the recording, which will be on our YouTube channel. So thanks again, Evan and Kevin, for joining, and to everyone else for taking the time to be with us today.
Thanks, Daniel. Thanks, everyone.
Thanks, Daniel, and thank you to everyone. Appreciate it.